Hey everyone, this is take 4. If you don't experience snow, this is as close as I was willing to get. Great. Today I'm here to talk about the 2020 recession. I think it's important for my opinion. This is an opinion piece, this is a speculation piece, but I think it's important that people know my authentic beliefs. Not necessarily for the recession, but with our economy in current day. Couple things I want to talk about. First things first, I think our economy works very differently, right? We have the investors that we often look at to think that they know what's happening with the economy and the recession. And then we have the actual consumers, the people at play that are buying the goods and actually turning the economy over. So first things first, I want to talk about the investment side of the money. Recently, we've been looking at the yield curve. A lot of investors, very smart people that look at big data, believe that this yield curve has been historically a good signifier of when a recession is happening. Now, obviously, once we start looking at something and our policy can start to see something happen, they can change it, and then we start manipulating something that has worked in the past, and it alters. And I'll put a couple links in the description so you guys can see what I'm talking about. If you don't know what a yield curve is, I would suggest looking at it. It's not my cup of coffee, but I'll talk on it a little bit. Investors, more or less, they see the inverted yield curve of more money going into these government bonds, backed bonds, which have a safe rate of return. Pretty simple, right? You take your money out of risky terms, you put it into safe, guaranteed terms, and you call it a day. Well, once we start to see all of this money moving into this area, the inverted yield curve, policy changes. So we have seen 3 rate drops in this year, and that means that money is cheaper to borrow. Some people say that that's because money is cheap to borrow all over the world, so the United States has to compete with that. Some people say, this is how we are going to continue to sustain our consumer-based economy. Mike Meadler, shout out to Mike Meadler, talks about an experience-based economy. And this is kind of what I want to talk about with you today. Investors in real estate, they are buying investments based on a spreadsheet, based on the numbers, the statistics of their return, their rate of return, their opportunity cost of that return. So when money is cheap and they are buying for a 30-year haul or a 50-year haul, or they're trying to buy and hold that property and use it as a rental property and maintain it and do all of the things that landlords do, they see cheap money, they buy. And that's kind of what the Fed does. You and I, consumers that buy our home because we want to experience large rooms or 2 bathrooms or finished basements or nice yards, we buy when the money is cheap as well. So borrowing has a factor into it. And we want to talk about that, right? Once we got rates below 4% to those that have, quality credit borrowers, we see the economy go through a little slump, a slide. However, some of the players have changed. So it's really important to talk about the different areas of the economy, understanding where you play, where you put, your tools in the sandbox. Dave Ramsey talks about it best. I love Dave Ramsey. I think he's super financially conservative, and I love learning his principles. He has 3 investments. One is real estate, his real estate portfolio. I don't know if it's commercial property and leasing or he owns 1,000 homes. I have no idea. 2 is his business, his media business. And 3 is long-term buy and hold mutual funds. He doesn't speculate on the stock market. He said he doesn't know enough about it. So for me, as a real estate agent, as a realtor, I always think it's important that when we are advising on interest rates or we're advising on how's the market, we're being very specific to how the market impacts you, how the market impacts your plan, and understanding that there is a lot at play, and understanding how those pieces fit in the long-term strategy really makes sense. So my idea of the 2020 recession is I think our policy is starting to speculate on which strings to pull. Obviously, we're talking about really low interest rates, meaning money is cheap to borrow. As long as you are in a good financial situation, it's up to you how you want to play it, how you want to invest. So right now, the big money, what they do is over the holidays, they look at how we spend. And they want to see, how does Thanksgiving spend? How does Black Friday go? How does everything over the holidays go based on how the entire economy feels about the strength or the weaknesses of the market. And the people that understand money and that play in the games and that they do their research, when money's cheap, they buy. We'll see what happens. I don't know. Can't wait. Gonna keep looking though. Happy Wednesday. See ya. Oh, I got a bow tie.